Good evening, folks. This is John with CoveredCallClub.com. It is Thursday, December 10th. We're going to talk Eli Lilly and my most recent covered call that I wrote and I bought back. And I'm not happy with it, but that's okay. Let me give you the backstory on this. So, Eli Lilly, I'm a big fan of Bristol Myers and Eli Lilly with their big pharma back-end business. You know, they've sort of stepped into the biotech business with their new diabetes drug. Eli Lilly has their diabetes drug. Bristol Myers has their new cancer drug. So these companies have tremendous growth potential in 2016. But they also have that big pharma element where they're one of those mature big pharma companies. So I like trading them because they pay nice dividends, they're steady eddies, and if you get stuck holding the stock, you're holding a big pharma that is not going away. Okay, it's not like an oil company. We're going to show up tomorrow, cut their dividend, the stock's down 90%. So Eli Lilly's one that I love. So Eli Lilly's got some great news. A couple drugs in the pipeline's just going to blow up next year. Here at 80, I went ahead and picked up some Eli Lilly. And I'm sitting there, look, what I'd like to do is I'd like to get 85 a share. 85 a share. I think in 2016, Eli Lilly goes above 95. I think it's a winner next year. But until we get there, I definitely think it trades like this. Okay, up, down, as evidenced with the last couple days, in fact. Eli Lilly rallied all the way close to 88 and fell back to 83 yesterday. So there is volatility here. So what did I do? Okay, I bought the shares at 80, and I'm holding it, hoping it goes to 100. Okay. In the meantime, while I wait, bought the shares. I recently wrote an 85 covered call. I think I got 88 cents for it. Okay. Well, look what happened. As soon as I write the covered call, and mind you, I only did it for a month. Month covered call, December 18th. Eli Lilly starts to rocket up. Now, I didn't think it was going to get to 85. Didn't think it was going to get to 86. If it did, I'd be happy. But, boy, I let my emotions get to me because what happened was Eli Lilly got up over 87.50. And I ended up buying the call back. So I got 81 cents. I wanted to be a part of the rally that heads to 90. Remember, this is what I think. I buy the call back. Okay, I buy the option back so they can't take my shares. And look what happens. Eli Lilly comes off of 87, down to 83. Luckily, I get a little bit here. But boy, it is a lesson in writing covered calls. We have covered calls consist of intrinsic value and time value. Okay? Intrinsic value is my strike price of 85 to 87.50. That is intrinsic value. I had to pay for that. Well, I made the wrong call because I paid for that, meaning I paid the $2.50 for it, and that's profit. That's profit in the stock. If I buy the call back, sell it at that point at 87.50, I realize that profit. I keep my premium. Life's good. It was a nice trade. Problem is, I kept it. So when I buy the premium, when I buy it back right there, and it comes down to 83, not a good trade. So with that said, the trade was good at 80. The trade was good at 80. Sold the covered call to 86, essentially 85 with the 88 cent premium. But boy, I let my emotions get to me. Bought it back, paid the intrinsic value. So now I have my shares back. Okay, didn't make anything on the trade. So lesson learned here is there's a little bit of time value here. I should have waited. I should have waited. So when you're writing covered calls, look, have a goal, stick to the goal. And boy, you know what? If you like my Chevron videos, look, if it rallies up, you get the covered call here, you get the tight premium, and it comes back down, buy it back here. Okay, that's a great strategy. You can do that month after month after month. But boy, when you get caught in that trade like I just did, where I felt like it was getting away from me, I had to buy the call back, made no money on the covered call, and now it's down a little bit. Boy, you know, hey, I'm just like anybody else. I got emotions. Should not have been emotional there. And right now, I paid over $3 for that. Now that same covered call right now, the 85 strike, I could have bought that back today for 126. So, yeah, I'm in it, but I'm in it to win it. So I do think Eli Lilly goes to 100. So at this point, I'm a holder of Eli Lilly, and I'll be writing another covered call. Why not? It's fun. Hey, I hope all of your covered calls are profitable. And until next time, good day.